What is going on, guys? I hope you are having an amazing day. I wanted to go over today's banger. Another day, another dollar for us at Eternal Exchange. As always, every single trade is taken live with my exact execution shown on the screen, with my exact stop loss levels, my exact TP levels. So maybe you missed this trade today, or maybe you caught it and you want to have a little bit more confluence or understanding. But if you did miss this trade, I want to go over it so that you can learn from me on how to use the GUI model, how to use the 15-minute orb, and just how to, better your trading. Really, that's at the end of the day. So I took two trades. First trade was a loser, and second trade was an absolute winner. So without further ado, let's get into it. Please don't forget, if you want to see more of these videos, leave a like, a comment, and subscribe to my channel. So I can start putting out more content like this for you guys, more education, so we can turn you into absolute monsters in this market. That's my goal for all of my students. I want you guys to turn into profitable, consistent, disciplined traders. And these videos, I hope that these are helping you guys kind of have a better understanding of my strategy and how to implement it. All right, let's jump into the trades. Okay, so to fully understand why I took the trades I did, I'm going to completely get rid of all of my stuff on the charts. I'm going to get rid of my executions, and I'm going to break it down from the very beginning, my pre-market analysis, why I saw the market moving the way it was, how I had my bearish bias, and how I got the narrative of the market. So we're going to start off looking at the 4-hour time frame. So going into market open, I had already noticed that price was rejecting a 4-hour SIBI, sell side imbalance, buy side inefficiency, all the way at the top of this range. And I actually talked about the shorts from this level last night. I called it out. Because yesterday we rejected that 4-hour, and then last night we rejected that 4-hour as well. So we rejected it a few times. It was looking like a really strong level. And then what I noticed is that we created another 4-hour SIBI right here. Boom. And then we start rejecting that one, and we see delivery down from that exact SIBI. Okay, perfect. Now, if we go down to the hourly time frame, I noticed the same thing on the hourly. We rejected an hourly SIBI here. We rejected an hourly SIBI here. We rejected an hourly SIBI here, as well as our new day opening gap, which is that gap in price that we create at that close at 4 p.m. and that open at 6 p.m. right here, new day opening gap. So then we created that another hourly SIBI right there. We rejected that. We're rejecting new day opening gap. So everything is looking bearish. We also created another hourly SIBI here. So if we look at these 4-hour and the 1-hour time frame, we know that price is extremely bearish. We have not disrespected any bearish levels going into open. So that's when we go down to the 15-minute time frame and we're waiting for market open, and we're going to chart out our 15-minute orb. So our first candle of the day at 9:30 is going to be our 15-minute opening range breakout level right here. I'm going to chart out the low at the wick. I'm going to chart out the high at the wick all the way up here. Okay, so this is now when we're starting to look for the break below to catch the shorts. Okay, so that's when I go to the 5-minute time frame. So I noticed on the 5-minute time frame, I used my Fibonacci retracement tool from the low to the high. I saw that we created a 5-minute SIBI, sell side imbalance, buy side inefficiency, and that we retraced back to the 50% of the range. Okay, so after I saw that, I was like, all right, nice. If we break out of this range, I'm looking for shorts. So we saw a breakout of the range right here, and I took the 5-minute order block entry. But I kept a really, really tight stop on this because I knew it was still a little bit risky because we had SMT at the time with ES. ES had failed to take out that orb low right here, so I knew it was a little bit risky. So I only kept a 39 tick stop loss, and I only went in, I think I went in 3 contracts, right? So I took a 39 tick stop with 3 contracts. I ended up losing about $600, no problem. I knew it was risky. I knew I was going to go light risk. Or lighter contracts. So now I see another retracement move back up to the 50%. Okay, and this time someone asked me in the chat, they said, why did you not wait for price to take out this internal high before looking for a short? And here's your answer. It's because we already had SMT divergence. If we look over here at ES, guys, look at ES at the same exact time as this move. Took out our Asia high. It was traded into a 4-hour SIBI. It took out our orb high. And obviously it took out this high as well. So we had major bearish SMT, which is a reversal indicator, right, for the shorts to step in. So now I knew once ESR reaction back down, shorts were going to be the play. We don't need to see this high get taken out because we are already in a 15-minute SIBI here. We're already in a 5-minute SIBI there, and we had SMT. So now when I'm looking for my entry, I'm looking for inversion back down. So I saw that we created a 5-minute busy, buy side imbalance, sell side inefficiency right here. I knew that once that 5-minute busy got inverse, the shorts were absolutely going to be in play. So as you can see, we closed below on this candle right there. We closed below that 5-minute busy. So now that becomes our 5-minute IFVG, or inverse fair value gap. And that's when I looked for my entry. So let me turn on my executions again just so I can see what my exact entry level was. My exact entry level was 23,698.50. Okay, so let's pull out our short position tool. 23,698.50 right there. I had to keep my stop loss above the wick of the IFVG because that is what we're supposed to do, right, with IFVGs. So I had about a 95, 96 tick stop, a big stop loss, right? And that's why I only went in 3 contracts, the same position size as my first trade, because I didn't want to risk about 6 contracts with 96 ticks. That's too much risk for me this morning. But what we saw was right after we got our entry, we saw just a little bit of stalling, and then boom, shorts absolutely started to dump, and we were looking for this internal low to get taken. Now, I did not take any partials until we hit this internal low. Notice how my executions are right here. I had a limit order sitting right here for 2 contracts. So I took my first TP, 2 contracts at 240 ticks. At that point, I saw a major SMT at the lows. So right here at that low, ES was all the way up here at that same exact time. So I knew that I did not want to keep a ton of risk. I wanted to trail my next stop loss all the way down, which is what I did. And that's why you saw that I got out all the way down here, right? But I still secured $3.2 thousand on the trade, trading 3 contracts after being down $600 before that trade. So even with all of that happening, I was still able to secure really, really good profit, even though I didn't catch the full trade. Because again, all I care about is taking my piece of the pie, right? We take what the market gives us. We don't get greedy. We don't always have to hold on forever. We don't always have to catch 400 ticks. Secure your profits on these trades. For me, I am more than happy with $3.2 thousand on the day. I'm good with that, right? So again, today is a great example of watching as patient, or being patient and watching it pay out, right? We could have jumped back in and forced a trade after that first loss and just hit our daily loss limit and been done for the day. But instead, we waited for an A+ setup to present itself so that we could feel convicted in a trade along with our bias. And that's what we did. And we're able to secure a big profit on the day, catch an absolute banger of a trade. Now, obviously, you could have held this one all the way down to first standard deviation or the 4-hour swing low, because this was our ultimate target I called out on the day, was actually this 4-hour swing low right there. That was our full TP level I originally had planned out. Obviously, I trailed my stop, though. So yeah, you could have held this all the way down to that 4-hour low for about 450 ticks, or down to our first standard deviation, which is where we stopped at around 600 ticks. So no matter what, on this trade, you would have caught big profit, whether you took it out here, whether you held it all the way down for those lows. Yeah, guys, that's all I got on this trade. I hope that you gained some value. I hope that maybe you learned a little bit about my GUI model strategy. Remember, we're looking for an internal liquidity sweep. We're looking for a delivery from a fair value gap on the 5, the 15, the hourly, or the 4-hour. We're looking for inversion, and then we're looking to target opposing liquidity. And we use that today in confluence with our 15-minute opening range and our 50% of that opening range. And yeah, hope you guys enjoyed the video and have a great rest of your day. Peace out, guys.